Alright, so let's continue quickly and then let's conclude on this. So question 4b, we were left with question 4b, something there. Oh. Your firm is auditing the consolidated financial statement of Seeing Eyes group of companies. One of the items assigned to you to audit is intercompany profit, that is unrealized profit on inventories. Required. Outline the procedures you will carry out to audit the intercompany profits. So what do? I think all of you wrote some points down on that. And I remember what?
Which number?
That's question 4b.
3B and 4B.
No, 3b, yeah, 3b. What did you write?
Copies of the company's purchase and sales ledger to verify sales or purchases occurred. Then a copy of year-end inventory list and reports from stock take to verify inventory from one company sold existing.
All of these things are necessary, but the key thing is about the profits on the inventory. But your discussions were not really bringing that home. Have you seen yours, John?
Sure, I wrote some recalculation of unrealized profit to confirm the provision for unrealized profit.
Recalculate of unrealized profit.
Calculation of the unrealized profit.
To
somewhere. So that you see when the inventories were really sold, like one sold to the other, we've confirmed that. Then now you come and calculate the realized profit. So if you give the unrealized profit, the answer is correct. Then now no pay or cancellation of the
What did you write, John?
Identify the subsidiaries that sold to
Who?
each other.
Okay, yeah, so the companies are sold. Yes. So it's like your point.
The profit margin
on those sales. Okay. Are these the only 2 points you raised?
No. Check whether you check on realized profits.
Yeah, you check the unrealized profit. So it's like your recalculation, the reperformance. Yeah, so basically you were all talking about a couple of things there. But let's look at generally what we are supposed to do under this circumstance. Generally. Number 1, identify and determine the appropriateness of the method adopted. The appropriateness of the method adopted for identifying intercompany profits on inventory. So, what is the method used in determining the profit? So, like John, your point was, what was the profit margin?
Yes.
But we are interested in what method did they use to derive that profit margin. So that's the first thing. Second, request the auditors of other group companies to verify. The auditors of other group companies to verify. So, this is the consolidated financial statement. So we need to look at the other auditors. Now, we are not told here whether we are the principal auditors or the other, but whatever it is, we are part of the audit. So we will request from the other auditors, do they also have anything about unrealized profit from the company? Did that company sell any goods to the company we are auditing? That kind of conversation. Third, check the calculation of the intercompany profits in stock. So, Nanaja, your point?
To verify what? Not to verify.
What? Yeah, to verify the sales between your groups. So check the calculation of intercompany. Check the calculation of intercompany profits in stocks. And verify that it is properly eliminated on consolidated statement of financial position. Now, the third point, does it make sense? You see, when there is unrealized profit, that means the person buying the goods will be carrying the inventory at their selling price, isn't it? So if you remember consolidation, if there is unrealized profit, we subtract it from the inventory figure on the consolidation. So when we are doing that, we need to check the calculation. So how much in totality is the provision for unrealized profits, PUP? Then at the end of the day, did they eliminate it from the inventories when they are preparing the consolidated financial statement? We need to consider that. So, next thing is to examine invoices from other group companies. Examine invoices from other group companies to identify the types of purchases from those companies. So the other related parties or related companies or the subsidiaries in the company, we will examine some invoices from them to see whether they issued any invoice to the company we are auditing. Are you getting it? Because they are related party, we can request them to give us that. To see the type of purchase. Maybe it's not goods. Maybe they sold assets. So they sold assets. So provision for that unrealized discharge shouldn't be taken in inventory, but maybe it's still being taken in inventory. So that is why we do that one. Then we inquire from management. We inquire into any significant differences. Any significant differences in the amounts of such provisions or of such unrealized profits in previous year. So these are some of the audit procedures we undertake in relation to the audit of Question 4. A. First JetCo is an airline company and is a new audit client of Brown & Co. You are responsible for the audit of the financial statement for the year ended 31st December 30th November 2014. The draft financial statement recognized revenue of $150 million and total assets of $250 million. During the year, First Jetco purchased several land plots of land located near major airports at a cost of, okay, so the cost of the land is $12.5 million. The land is currently rented out and is classified as investment property, which is recognized in the draft financial statement at fair value of 14.5. The audit partner has suggested the use of an auditor's expert to obtain evidence in respect of the fair value of the land. I think this question, almost everybody got everything there. So required. In respect of the land recognized as investment property, I explain the additional information which you require to plan the audit of the land. So I think you all wrote something. Nanaka, you said something that I told you that I didn't like. You said that according to IAS 40, the assets should not be depreciated, whatever, all those things. We are not interested in all that. Are you getting it? So what are the information we need? First, is the land material to our audit?
I did that. Because I got other things correct.
You calculated the materiality?
Yes. Then I even said a copy of the board minutes to verify if the purchase of the land was approved and authorized. And as what date. Then I talked about...
Okay, so what information do we need here to plan the audit?
Materiality.
Materiality. So what is about materiality? If you check, the cost of the land is 12.5. So 12.5 over revenue, 150. What do you have? 5%. Then, so this is materiality to the statement of comprehensive income, isn't it? Then materiality to the statement of financial position will be what? Still 12.5 over 250 million.
250 million, 5%.
So to the income statement is what?
That's always, you have to do both.
Who's the first question I saw here? That is not material to one, but it's material to one.
8%.
So it's material to both what? The income statement and then this. But even here, the examiner said, what additional information which you require to plan the audit? So it means it is material already.
Yes.
Hence, what additional information? So really at this point, materiality calculation is not even what? Necessary.
Most of the board minutes.
Yes, we need to look at why would we say, why do we go for the board minutes?
The land belongs to the company.
Okay. That is checking about the title deed.
Yes.
Are you getting the idea? So I think you mentioned that as well.
Yes, the land deed to confirm.
A title deed of the land
Yeah.
to confirm what? Right and obligation.
Yes.
Who actually owns the land? Who sold the land to us? Then you mentioned something about land commission. Who should go to that land commission?
Well, the land doesn't deed, we don't check it from land commission.
That's what she said. She said we should go to the land commission and go and check whether the ownership has been transferred to the company. That's the exact word he used. I memorized it very well. So we look at the title deed to look at what? Whose name that the asset is in. Then we also need to obtain detailed reason for the purchases. So we inquire from management for them to give us detailed reason for the purchases. Why did they buy the assets? Are you getting it? Did they buy it for capital appreciation or they bought it for what? Rental purposes. Or they bought it to be used for office but later on changed their mind. Are you getting the idea? Because an investment property can be only recognized when the asset is held for capital appreciation or for rental purposes. So the fact that it is being rented does not only qualify it to be what? Recognized. But we need to ask them, what was the original purpose for the acquisition in the first place? Are you getting it? So detail on the purchases. Now, we need to also find out whether management has specific plan. So we inquire from management. On specific plans for the land in the future. So does the company have any plans for the land in the future? It's very important. It's very important. We need to determine the date of the purchases. Why do you think we are interested in the date of purchases?
Date of purchases. At all.
Not that.
To confirm if it was authorized by the board.
No. Because once it says here, see, it has been carried in the, at fair value for 14.5 million. So that we will determine how long it has taken for that 2 million extra to come on the asset. Because they bought it for 12.5, but they are now carrying at 14.5. Meaning there is an increase in the value of the land by what? 2 million. Now that increase is not a short period of time. So we need to determine the date of purchases so that we can what? Calculate or ascertain the value of the assets, of the land at year end. At year end, very important. We need to also inquire about, we need to inspect the rental arrangement or rental contract or agreement. Why do you think we are interested in the rental agreement? Why? We are renting the land to some people. So why do you think it's important for us to inspect the contract between us and the people?
Actually rented out.
The amount of rent.
The terms of the rent, and most importantly, who is the land being rented to. So if it's a related party, then a disclosure has to be made. Are you getting the idea? So he inspects rental agreement or contract to verify the one renting the land, whether a related party.
Date of purchases to what?
Date of purchase to calculate or ascertain the value of the land at year end. That's increase in value. So that we can measure it reasonably. Because you can't buy a land and after 6 months you say the land has increased in value by 2 million. I mean, what has happened to that community you are in? Unless otherwise, it's already a 5-star community. Or maybe unless it's otherwise a 5-star community, like Prasako, then something will happen and it will increase. Even that one is still going to be subjected. Then, then we need to find out what is management's rationale to carry the land at fair value. So we need to find out what is the rationale of management to carry the land at fair value, because when the land is carried at fair value, it will increase the profitability of the company as well and increase the financial position of the company. So we need to find out. Then sometimes we need to determine the location of the land. Why do you think we need to know the location of the land? To plan our logistics for the audit. You know we have to go to the land to inspect it. because it's material. So we need to go there to see how many acres of land is it. Is this land actually worth the value being placed on it? So we must know the location, so we plan our logistics. So these are a couple of things we need in relation to that. So these are some things we can mention. It's just a 5 marks, so we ain't going to be writing much. So at this level, really, materiality is meaningless. Okay? It's meaningless. What are you missing? II says, explain the matters to be considered in assessing the reliance which can be placed on the work of an auditor's what? Expert. You know, we are told in the last paragraph that the audit partner has suggested the use of an what? Auditor's expert to obtain evidence in respect of the fair value of the land. Meaning, we will bring somebody, the person who values the land, we will go and check his work. So, I think you spoiled the paper there for that. Now, that is according to ISA 620, using the work of ISA 620, using the work of an auditor's expert. Using the work of an auditor's expert. So according to ISA 620, using the work of an auditor's expert, we need to check the what? The experts, a couple of things. So what are some of the things we mentioned? Objectivity, qualification. So let me not even go into it. Competence. Competence. Experience. Independence, I think spoke about it. Actually, competence can actually be your experience and knowledge, right? Yeah, competence can be. So that you get more points, eh? So that is it. So your objectivity, the competence, or experience, independence of the auditor. What else? The assumptions that he used. Assumptions used in the work. What else? The report of the expert. Okay. When you say the report of the expert, like how?
You obtain the report of the expert and read.
That's the part that I'm
That will fall so that you see the assumption that he used in the work. Okay, so when we say the assumption used here, you are talking about the relevance and the reliability. Are you getting it? So what factors did he take into consideration in making those things? So I think here you spoiled it there, so I wouldn't talk much here about it. You spoiled the paper there for me. The success of every company is dependent on how the entity is directed and controlled. I said this question myself. This means that good corporate governance is critical, and best practice recommend that companies must have an internal audit department that ensures that the entities are properly managed and controlled. Explain the roles of the internal auditors in good corporate governance. Right? I think everybody wrote something there, so I'm not going to go through anything. I gave you how many marks? 7. I did 10 marks, no more 7 now. Nana Joa, Imaye Wate. Namisai. Miss Enkampo. What did I give you, John? That's number 4B. I spoiled the paper there. The roles of the internal audit, right? So this question was about the roles of internal audit. Audit committee came last time. So maybe internal audit function. Yes. That's why I brought the role of internal audit, especially in corporate governance. That's why I linked it Alright? So any point you raise, to some extent, it has to be linked to governance. No, I'm not giving any point to.
Oh, you sure?
What you've written now is.
You mentioned that.
What you have written now
You
here.
know, I almost left. That was a lie.
Yeah, Nana Joy, you are
There are
perfect.
some things we left out.
Hey,
Yeah, ready is it's me feeding Musa.
Hi, just for you, baby.
Okay, so roles. Now, so best practice suggests that every entity or company should have what? An internal audit department. As such, we have to ask ourselves, what are the roles of the internal audit department in corporate governance? So the first thing has to do with what you guys mentioned in the internal controls. Internal controls. Now, it is very important for the entity to have what? An efficient and effective internal control system in place. Okay? Effective and efficient internal control system in place. So, now the internal audit department would what? Evaluate and continuously monitor the internal controls of the organization. Okay? So they will evaluate or they monitor continuously the internal control system to find out whether they are working efficiently or what? Effectively. Now, why is this important? Because the true and fair view of the financial statement is affected by the effectiveness of what? The internal controls. Does it make sense? Because, you know, we don't just prepare the financial statement. It doesn't come from a thin air. It comes from the internal control. So if the internal control systems are weak, then the financial statement will not represent a true and fair view of the entity. But if they are strong, to some extent, it will represent a true and fair view of the entity. So the first thing we can talk about is internal controls. Second thing we can talk about is in relation to some functions they undertake. The internal audit department in the organization undertake a couple of functions that aid the organization. One of them is what we refer to as the value for money audit. Another thing is about compliance or non-compliance audit. Now, why is this important? Especially the second one, the compliance and non-compliance. Because that could affect the entity as well as what? The financial statements. We need to find out whether, one, internal control systems are, somebody mentioned that point, whether internal control systems are working, you are the one, right? Whether internal control systems are working, so whether internal control systems are effective as designed and implemented. Now, not only that, not only about internal controls, but also about what? Laws, rules, and what? Regulations. So, is the entity abiding by laws, rules, and regulations? It is the internal audit department to do that. Another function they also undertake is what? Risk management or risk assessment, sorry. Risk assessment. The internal audit department has a function of risk assessment where they assess the various risks that the business is what? Exposed to. Now at this level, you know there are three types of risks, which is what? Operating risks, compliance risks, and what? Financial risks. So the various risks that the business is exposed to and how they can manage that risk. So internal controls, the functions they undertake, and then the third thing is recommendation. Recommendation. Now, it looks like this one connects with the first point. So they make recommendation on improvement in internal controls, as well as accounting systems. In case you get here, you are looking for the meaning. So recommendation on improvement of IC, internal controls, AS, accounting systems. So if, for instance, they undertake their audit. Now remember, one of the audit they also undertake is forensic audit, right? I hope you know that. When they assess or evaluate the internal controls and they are not working well, they will make what? Recommendations on how the accounting systems. Accounting systems. So they make recommendations. Did they give us a limit? But they just said explain the rules. Next one. The audit. So internal audit department with AC. What is AC? Audit committee, okay, play an oversight role on the management of the company. So they find out whether ye this can ye ana ye dini ye, ye teachers can ye ana ye teachers can ye. Hannah talk abino to find out whether Hannah actually paid for the money or she's not going to pay for the money. Internal auditors are there to make sure that the guys do not misbehave. And they are also there to provide an assurance on draft financial statements and liaise. Somebody use that word. Liaise with external auditors. Liaise with the external auditor in their work. So EA here is external auditors. You see, internal auditors will audit or review the draft financial statements before it is given to what? The external auditors. Why? So that if there are any fraud and errors, they may be able to identify them before the external auditors come. What does it mean? It means when the external auditors come and they find any fraud and error, then internal auditors didn't do their job well. Or better still, they are not too independent as we expect them to be. So these are a couple of other points that I think you barely have all these, yes? You actually have all these. So that's what we do there. So let's get the last one, the next 10 or so minutes. I think that question 5 to you spoil everything there. You did everything doable. Everything doable. Alright. The exact time, that's it. The exact time. Alright, so let's get the last one, question 5. I think you also answered that explicitly there. So let's look at it quickly. The auditor of Davis Co. financial statement for the year ended 30th of November 2017 is nearing, is nearing completion, and the auditor's report due to be signed next week. Davis Co. manufactures parts and components for the aviation industry. You are conducting an engagement quality control review of the audit of Davis Co., which is a listed company and significant new client of our firm. The financial statements recognize revenue of 8.7 million, asset of 15.2 million, and profit before tax of 1.8 million. You have identified the following issues. Okay, so off the bat, let's see what is happening. Rev has been given as 8.7 million. The profit before tax has been given as 1.8 million. We've been given the assets of the company as 15.2 million. This is to help us to calculate what? Materiality later on. I. The planned audit approach to trade payables was to place reliance on purchasing controls and keep substantive tests to a minimum. During controlled testing on trade receivables from a random statistical sample, the audit team identified 3 purchase orders which had not been authorized by the procurement manager. On review of the supporting documents, the audit team concluded that